Ever wondered how much a SaaS business is actually worth and what's driving or killing that number? Let's talk about valuation. What drives SaaS valuation? Three main models investors look at. SDE, that's seller directionally earnings, mostly for small businesses. EBITDA, which is basically profits before taxes. And then there is revenue-based valuation, which is popular in SaaS because growth often comes before profit. But valuation isn't just math. It's story plus metrics, and that story better show you're running a scalable, predictable machine. Here's what they're looking at. First, revenue quality. Not just how much you make, but how. Recurring versus one-off, a high churn or low churn, and monthly or annual contracts. 2 million ARR with 2% churn is way more attractive than 3 million ARR with 10% churn. Investors want reliable, predictable growth, not revenue that disappears in a month. The second, customer metrics. You knew this was coming. CAC and LTV. You don't just want customers, you want profitable customers. If you spend $500 to acquire someone who brings in $400 total, your growth is eating itself. Healthy SaaS businesses shoot for LTV that's 3 to 5x to CAC. Also, track conversion rates across funnels. This tells buyers how efficient your machine really is. Number 3, clean operations. Investors want a business, not a mess. Are your financials clean? Do you have documentation? Could a new CEO step in without needing to DM you 24/7? Delegation and process raise value. Founder dependency lowers it. Now, here's where design comes in. You can have great numbers, but if your product feels clunky and hard to use, it's going to show. Let's be blunt. Maybe SaaS founders underestimate how much design impacts valuation. Investors don't want to fix your UX. They want a product users already love. That's where we come in. At Eleken, we've helped dozens of SaaS companies clean up their UX, clarify their positioning, and make their product feel premium. So when it's time to sell, they don't have to justify that multiple. Take Database, for example. Their backend was strong, but the interface didn't reflect the product's value. We redesigned it with clarity and growth in mind, and shortly after, they raised 3.6 million. Now, that's valuation impact. Or Reveal, the data privacy space. We help them refine their flows, improve adoption, and tighten up the user experience. Not only did their churn drop, they suddenly had a case they could show off to potential acquirers. That's a real leverage. Good design equals high retention. High retention equals stronger LTV. Stronger LTV equals better valuation. So, how can you raise your SaaS valuation before sale? Let's recap. Cut churn, raise LTV, streamline ops, clarify your product's positioning, and redesign what needs fixing before investor tells you to. Even better would be to get a UX team in early. One that works fast, think like a founder, and knows SaaS inside out. That's us. If you're preparing for an exit or just want to build a more valuable company, book a call with Eleken. We will audit your product, highlight what's hurting your valuation, and help you fix it fast. And if you like this, like, subscribe, drop a comment. What's one thing you think boosts SaaS valuation that no one talks about it?